Yesterday on the NASDAQ, the net new highs to new lows was 601. 601 new highs net. That's only happened 15 times since 1984 when the index was created. So by looking at the entire market, not just these indices, it does seem that there's a quandary over whether the next catalyst will come from buyers just chasing these performance, or rather the reluctance of those who sell could actually play a role here. Something has to happen. Something has to give to get this market shifted into a higher gear. So I'm going to call it a conundrum. And I want to get the read from our market panel. Market Gauge Group Managing Director Mish Schneider is with us. Strategic Wealth Partners, Wealth Advisor and Investment Strategist Luke Lloyd. That's a mouthful, Luke. Rob Luna.
Right?
He's the CEO of SureVest, which is a CI financial company. And let me start with you, Rob. What's your take on this market that, for the most part, spinning its wheels, yet it's showing resolve? But every single day, if you look beyond these indices, there are gigantic pockets of big-time money being made.
Yeah, no, someone told me a long time, Charles, it's a market of stocks, not a stock market. And I think for the last year coming into this year, that's really playing out true, where it is, quote unquote, a stock picker's market. You have to pick your stocks. But when you look at what's going on between COVID, right now we just had the runoff election, there's going to be a lot of volatility. There's always something to be worried about. But conviction is your friend. You have to do the research. You have to buy dips in a market like this.
Right.
You look at names like Facebook, Zoom, they got beat up, but look what's happening today. Those are winners in an otherwise down market.
Yeah, Michelle, that's it, though, the concept of fear. Sometimes there's fear of missing out, and sometimes there's fear of losing your scalp. And that pendulum seems to swing back and forth, and it feels like it's right in the middle right now. Your thoughts?
Well, I think it's a pretty safe bet that any correction, I agree with Rob, should be bought. But you have to be careful where you look. As you said, this still is somewhat of a stock-picking market, but that makes it mysterious. Look at the big mega trends, whether they're cultural, social, or economic. Things like 3D printing, AI, EVs, cannabis. These are just some healthcare that are going to continue to perform as we get into 2021. So if you know your risk, you buy in the correction, you should be actually pretty well set up for the rest of the year.
And you actually underscored the point I've been making, not just right now, but throughout the history of this show. One of the things I've tried to do is not just say, hey, you know what, let's take a look at IBM, right? Those stocks in those areas you mentioned are not reflected in the major indices, and yet the big-time money's been made there. Luke, how are you looking at this market right now as we head into a 3-day weekend, the inauguration next week, and a whole lot of unanswered questions?
Yeah, Charles, when it comes down to it, you need to be selective with what you own. At large valuations in the market, in a market where everybody wants to own growth, taking some money off the table with stocks that have super large gains in your portfolio allows you to have some cash to deploy if we get a 10% pullback. And record levels of cash have been on the sidelines the past 6 months, and some never got back in. Dips will be bought on stocks that are loved, so make sure you're quick on your feet to buy those dips.
All right, and by the way, for my own subscribers, we came into the week at zero cash. We're at 25%. We've been ringing the register like crazy, and I'm excited, like everyone on the panel, it seems, to buy any sort of dip. Hey, real quick, Luke, what do you think about Wall Street yawning at this Biden rescue plan?
Yeah, did you see the small business support in the plan? There essentially was none. The goose that lays the golden egg needs protected, and Democrats don't look like they're going to be protecting small business, and that's not good for the economy, and higher taxes will pay for the stimulus down the road. So all of that going on is not good. Also, the $15 minimum wage is going to crush small business that is already hurting. If we don't want to deploy the stimulus, if we don't deploy the stimulus in the right areas, it could get ugly very quickly.
Rob, one of the themes this week is chasing winners. I got to tell you, I took profits. Almost every time I take profits on something, the next day I'm like, golly, they went up again? GameStop is an example of that, right? What names, rather, are you looking at? Some of these big winners, though, that maybe people should still consider owning.
Yeah, I totally agree, Charles. I think we're all a victim of that. We've had such big runs in our portfolio the last year. I think we've all sold a little bit too soon because you look at names like Tesla, they continue to get that momentum. I've talked about Zoom before. Unfortunately, I don't do this show every day. Just a couple of days ago, it went down to 330. It filled a gap, hit the 200-day exponential moving average, and it's been skyrocketing from then. But what that means, Charles, I'm not a big technical analyst, but in a market like this where you have to separate price from value, technical analysis does work. Look at some of the charts, look at some of these big names with a great narrative. Those are the names that are going to move, right, and buy them on these pullbacks if you look at the charts and get some support.
Another thing it feels like that might be bothering this market is the specter of inflation that the Fed cannot control. We just saw the Michigan consumer confidence number come out, and the expectations for inflation over the next year has rocketed to 3% from just 2.5% in the prior report. Neil, Michelle, Jay Powell spoke at length yesterday, and what I noticed is as he was speaking, equities started to drift lower and lower, commodities started to go higher and higher. What role is inflation going to play with this, with the economy and the market this year? Because many are thinking it might derail the Fed's plans to keep rates low forever.
Well, there are pockets of inflation, but what the Fed uses is called the personal consumption expenditures. So they look at what we spend on food, housing, cars, healthcare mainly. There are other areas as well. And if you look at those areas, food's gone up, but everything else has been floundering. And that's what they're looking at. So what really I think is going to happen here is that with the Fed sort of keeping blinders on to not only what's going on with food, but what we've seen in some of the industrial metals like copper and steel and lumber, that inflation could pick up, and I think the Fed will be a little bit late to the party because what they're talking about is keeping the pedal down and keeping those rates low and keeping the bond buying program going.
All right, well, I got to tell you, it really feels interesting right now because Wall Street's, I think they need maybe the Fed to do or show the love because the lip service ain't working right now. Hey, I want to talk about Bitcoin. I got to bring it up because obviously it's still one of the most amazing stories in the market, but not the cryptocurrency though, right? I want to talk about, Luke, the stocks that are associated with it because I've been trying to trade some of these things and they move better than Bitcoin. And it seems to me they're in two classes, right? You've got some large names, for instance, PayPal. PayPal fetched an upgrade this morning from Mizuho. They said that it's all because of the volumes in Bitcoin, but you could also add Square and, of course, MicroStrategy's on that list too. But the smaller, more volatile names, I mean, they've been rocket ships, whether it's Mara, and the others. I know you've been active in this space. Are there any Bitcoin stocks that you would be looking at?
Charles, these stocks are going crazy, but I still would be very careful with some of these stocks. They are bursting with people trying to get exposure to Bitcoin. And accounts like IRAs and brokerage accounts, it's still hard to access Bitcoin directly. That's why these stocks have been going so crazy, especially in these retirement accounts. I think these stocks will come back to earth once these retirement accounts start being able to trade Bitcoin, maybe through an ETF or easier access to get Bitcoin. If you want to own a Bitcoin stock, I would buy PayPal. Their demand for Bitcoin is very high, and their business is ready to take full advantage of transactions with Bitcoin in the future. I think this is going to end very similar to the early dot-com bubble of the 2000s. I think this is going to be where a lot of these large companies are going to come out stronger, and a lot of these small companies are going to get crushed because a lot of these small companies, they still have a lot of overhead. They still have, salaries to pay. They still have,
Right.
operating expenses. So I'd be very careful with these small companies.
Hey, Rob, let me get some words of wisdom as we go through the three-day weekend and into earnings season. It didn't get a good start this morning from the bank stocks. Can earnings provide some kind of oomph for the next couple of weeks?
I think it's going to be stock dependent. And also you look at JP Morgan, they had pretty good numbers, Charles, but when the stock rallies 30 to 40% on those numbers, it's going to be selling to the news. So I think it's going to be case by case. You're going to have to look at some of these names, do some of your research, like I said. And if there's names like PayPal, when you look at some of these analyst estimates, I don't think crypto's counted into that. Look for some that could come out with a surprise, because without a surprise, you're not going to get a further rally from earnings releases.
And I think to your point, everyone's banking so much on these banks that if the smallest thing doesn't work out, I believe JP Morgan's loan loss provision was just a little bit more than Wall Street expected, and down she goes. Michelle, Luke, Rob, three of the best. Thank you very much. We covered a lot, and you helped us a lot. Appreciate it. Have a great three-day weekend.
Thank you, Charles.
Now, of course, every day, folks,